they say home is where the heart is, but for traders of Opendoor, maybe home is where the volatility is. I mean, one day it's up 15%, the next it's tumbling 9%. Feels less like buying a house, more like, well, riding a roller coaster. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we are diving deep into Opendoor Technologies, ticker symbol OPEN. We're using our research based on data from before the market opened on August 27th, 2025.
Yeah, and our mission today is pretty straightforward. Give you a clear, concise picture of what's really driving this stock. We'll look at the big picture, the macro stuff, the company's fundamentals, what the market sentiment is telling us, and of course the technicals.
Okay, let's start with that big picture then, the macro environment.
Well, zooming out, pre-market futures are looking pretty flat, maybe slightly positive, but there's definitely a bit of fog rolling in. Moody's Analytics just put out a warning saying nearly a third of the U.S. economy might be near recession.
A third? Wow.
Yeah, it definitely creates a cautious backdrop, especially for sectors sensitive to interest rates, like, real estate. So something we'll be keeping a close eye on today is the mortgage applications data. That should give us more clues on, well, the pulse of the housing market.
Right, okay, so a cautious macro picture. But Opendoor itself, the whole Amazon of house flipping idea, how's it doing against these headwinds? Because what's really striking is, despite all that caution, the stock's been on an absolute tear, up over 200% year to date.
It's wild.
Yeah, it seems fueled by, well, what we often call meme stock energy, retail investors, social media buzz, hopes for Fed rate cuts. But yesterday was just a classic example of its crazy nature. Huge rally in the morning, then poof. Completely gone by the close.
Exactly. And that kind of volatility, it just screams for a closer look at the fundamentals. Wall Street analysts, they're mostly sitting on the fence, about 50% rated a hold. But what's a bit concerning, I think, is that the sentiment seems to be souring. Over the last 3 months, we've seen buy ratings dry up a bit, while sell ratings have actually increased.
Not a great sign.
No. And it raises this big question about its actual value. Our models, they're suggesting a negative fair value. Somewhere between -$1 and -$3 a share.
Wait, negative fair value? You mean liabilities potentially outweighing value?
Yes, precisely. It's not just a low valuation. It implies, fundamental issues might be deeper than the current price reflects, especially when you look at the $4.70 price tag compared to negative revenue growth and ongoing profitability challenges.
Okay, so it's like this compelling story clashing with some really scary numbers.
That's a great way to put it. A story versus the numbers.
Which leads us right into sentiment, doesn't it? Because that feels like a tale of two completely different traders looking at the same stock. On one side, you've got, surprisingly, a lot of optimism in the options market. The put-to-call ratio is down at 0.48.
Yeah, that's pretty low.
Right. It means for every bearish put option, traders are buying nearly 2 bullish call options. That signals pretty strong short-term optimism. And the real hot spot seems to be that $5 strike price. Almost 90,000 contracts open there. It's acting like this huge magnet for the bulls.
So, and this is a big but, the counterpoint is just massive. A huge 24.37% of the company's available shares are sold short.
24%, that's enormous.
It really is. That's a very significant chunk of the market making a heavy bet that this stock is going down. So, yeah, it's a classic sentiment standoff. You've got the options bulls squaring off against the short-selling bears. Both sides seem dug in.
Okay, so we've got fundamental red flags, this wild sentiment battle. Let's try and cut through the noise. What are the charts, the actual price action, telling us, setting aside the fundamentals and the feelings for a moment? Technically, the trend looks undeniably strong, doesn't it?
Oh, absolutely. Both the long-term and short-term indicators, they're flashing green. It shows a really powerful, established upward move. This isn't just a blip. It's been building for months.
What about volume?
Volume's a bit more of a mixed picture, actually. We are seeing some recent selling, maybe profit-taking after the run-up. But importantly, if you look a bit longer term, big money seems to have been accumulating shares for weeks. So there's that underlying buying interest.
And momentum, how's that looking?
Momentum is overwhelmingly positive.
Yeah.
Multiple gauges are actually accelerating to the upside. Buying pressure is building, trying to kick this thing into a higher gear.
Okay, strong trend, building momentum.
Right. And one more thing. Volatility. It's high, and it's actually getting higher. The indicator we watch for the daily trading range is expanding. So what does that tell you? Expect big, dramatic price swings. It's not for the faint of heart.
Definitely not. Okay, so pulling all that together, fundamentals shaky, sentiment divided, but technicals strong. What's the verdict for today's trade?
Look, despite those long-term valuation worries and that really high short interest, our verdict for today leans towards a bullish outlook.
Bullish, even with the red flags.
For today's trade, yes. Why? Because the technical picture is just so overwhelming right now. Strong trend, accelerating momentum, that bullish option setup. It suggests the path of least resistance, at least for today, is probably up. It's really a momentum play at this point.
Okay, so a momentum play for today. What's the game plan then? What levels should traders be watching?
All right, here's how we see it potentially playing out. Bulls really need to get back above that pre-market high, around $4.92.
Okay, $4.92 first hurdle.
Exactly. A solid break above that, and suddenly that critical $5 option strike comes right into focus. That's the magnet.
And if they push past 5?
Then the next major target would be the recent high up at $5.28.
Got it. What about the downside? Where's the danger zone?
Key line to watch is that pre-market level around $4.76. Think of that as the initial support.
Okay.
If sellers manage to push it below $4.76, then you'd look towards yesterday's low of $4.37. A break below that would pretty clearly signal the bears are taking back control, at least for now.
Right. It really does sound like Opendoor is, well, a trader's paradise, but maybe an investor's headache.
That sums it up well.
The fundamentals kind of suggest it might be a house of cards, but the charts, they're saying the party's still going strong, for now anyway. So I guess the advice is, if you're planning to join the dance, make sure you know exactly where the exits are before you step onto the floor. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of D-Risk.